All right. So we're back, and from the last recording, I left off right here, and I'm not gonna do any introduction or anything. I'm just gonna continue on with the lesson. This lesson is major reversals in the market on a monthly perspective. So we left off right here in this area, right?
Mm-hmm.
So, so first thing I see on this aggressive move up, the first thing I see is equal highs right here.
Yeah.
Now, from the last recording, you heard me talk about, equal highs and equal lows. They're not trade opportunities. They are targets, right? We want to take money from the people that buy or sell equal highs or equal lows, right?
Yeah.
So in this area, as you can see right here, maybe on a lower time frame perspective, maybe we had something like this,
Uh-huh.
right? And then,
Double top.
and yeah, and then it gets ran through, right? So
Yeah.
let's go down to the weekly and examine. Let's try and extract what's going on a lower time frame bias, right? What's going on a lower time frame bias? All right. So clearly we see the equal highs now right here.
Uh-huh.
So equal highs, not a trade opportunity. It's a target. All right. Why is it a target? Because there's stop losses right here above these for people that sold, and then for people that that put buy stops here, they expect price to go through this certain imaginary area and continue going up, right? As soon as their position activates. And it doesn't always happen. In this case, though, they did make some money, right? They made some money. But that's not what we're looking for. Those aren't the trade setups we're looking for, right? So when we get up into this, we kind of see like a distribution type of schematic.
Uh-huh.
Hold on. We see like a distribution type of schematic, right? So we have this upthrust right here through liquidity. Okay, so I'll delete this now since we are in it right here. Now, what do we see? What do we see after this liquidity gets captured? Right, we see this aggressive candle to the downside. Okay, we see this aggressive candle to the downside. That kind of gives us a sense of the banks leaving their trails behind, right?
Yeah.
Kind of gives us an idea, maybe okay, so they had slippage to the downside and they brought it back up. But where did it go to specifically? Right? So, smart money, what we talk about, we talk about, you know, liquidity being captured and then impulsive moves off of either the last up candle before a down move or the last down candle before an up move, right? We want to see price move aggressively away from these areas,
Yeah.
right? So the area that I would be focused on is this order block right here, this one, and on
Yeah.
this one you can use the 50% area for let's say like you're kind of a passive trader. You're not aggressive. You don't take entries on the wicks or the open of the body, right? So you got this weekly 50% area, right? And don't get me wrong, like 50% areas don't always get hit, but if you miss an entry on the 50% area, at least you have a bias, right, on which way the direction of the market might be going. Okay,
Yeah.
so always remember that if you don't you know, get your entry at your first point of interest, don't get discouraged and just stop looking at the pair, because there might be another entry setup that presents itself, you know, a couple days later, right?
Yeah.
It could happen. So in this scenario right here, I like this setup actually. This is juicy right here. This is really juicy because on the previous recording I did breaker blocks, and I'm going to do one in the future over mitigation blocks. But this setup right here doesn't even need that much explanation, right? So the same kind of context goes for mitigation breakers and uh, or mitigation blocks, excuse me, and breaker blocks, right?
Yeah.
So so in a this would be a bearish scenario, right? Because we see this candle right here giving us a hint, leaving a trail behind, that maybe, you know, with this slippage in price, there might be a market shift, a shift in the market, right? So what we look for, that last up candle before this down engulfed move, right? Which engulfed 1, 2, 3, 4, 5, basically, you know, 6 weeks of a range, you could say. Six weeks of a range right here, you
Yeah.
could say. Right? So that's like a dead giveaway. Okay? But here's the reason why I like this. Let me delete that. So same as a bearish breaker block, it's the same as a you know, the context is the same as a bearish mitigation block, right? So in a bearish range, or a down candle in the most recent swing low prior to an old high being violated, right? So if we look over here, there's these highs that got violated, right?
Uh-huh.
Let me do the arrow. There's these highs that got violated, okay? So what we see now, these highs right here did not. These equal highs right here did not. But when we broke out of that range that I just showed you, this 6 week range, what direction did it break out? To the downside, right? To the
Yeah.
downside. And it came back up perfectly off of this 50% weekly order block. Now, here's the reason why I like this. Say you missed this entry right here. Say you missed this entry, right? So what's the context right here? A down closed candle in the most recent swing low, right?
Uh-huh.
That down candle right here. You see this fat down candle?
Yeah.
Look at this. You see, here's your entry. So this is acting just like the breaker blocks. The mitigation blocks act as a break and retest too. So here's the difference, right? Here's the difference in a breaker and a mitigation, right? So a breaker will look like this: make a high,
Uh-huh.
a hold on, let me do it over here. So it'll make a high, an intermediate, like minor swing low, a
Uh-huh.
new high, and it'll break this low and retest right here, right?
Yeah.
So mitigation does the same, but it doesn't run through the highs. It goes like this. Okay?
Uh-huh.
So you'd be looking at that point of interest right there. Now that looks exactly like this setup, right?
Yeah.
Looks similar. Okay? So actually I like this. This is really juicy. You see this long down candle?
Yeah.
leaving trails behind. Banks leave trails behind. And there's also this imbalance right in between where there was no trading done, right? There was straight slippage in price, right?
Yeah.
So right here, we're going to go down to the daily, and we're going to examine this area in the daily, on a daily perspective. I remember on some of these, um, like when we progress forward into like these reversal areas, I can go. Hey, can you hear me?
Yeah, I can hear you.
Okay. I can go down to the 4 hour and the 1 hour, right?
Uh-huh.
But I can't do that, back here in this price data because it's just too far. It's too far for the 1 hour and the 4 hour, which kind of sucks.
Yeah, I hate that.
But here's what we're looking at. So let's recap on this daily. We had these monthly or weekly, you could say, equal highs, right? They
Uh-huh.
get ran through. And this is what's crazy about this too, because look, even let's say this high right here, and you bring this all the way over here. You see this? You could have caught a counter buy right here. You see that?
Yeah, that's crazy. Yeah. That's so
Yeah.
so what is that considered a mitigation play?
No, this would be a breaker right here, simply because these lows right here,
Uh-huh.
you see how they get broken,
Uh-huh.
and then price goes up. This is that recent, the most recent. So it broke these highs, and then this one. So it broke this one first, right? So since this was first, technically after this one would be the last one, right? If that makes sense.
Yeah.
So this is the recent one that it broke. So you could have actually caught a nice, counter trend buy right here
Nice.
up into your weekly. You have that weekly order block up here. That could have been your target.
Yeah.
600 pip, 600 pip buy, right?
That's
But
crazy.
let's bring it back here. So we got these equal highs, right? We ran through. Now we're in this scenario right here of this range that we were in that I showed you for a good amount of weeks, right? Good amount of weeks. We had this breakout. Okay, you see this slippage in this price, and we come back up to mitigate out of all these orders. On a daily perspective, you can refine this. You see
Yeah.
this right here. I'll make this line red. You see this area right here?
Yeah.
Straight to the T, right? Straight to the T.
Yeah, that was a
On
perfect
this,
one.
on this entry right here. This sell. Now say you missed this. Say you missed it, right? Now look what happens. The same thing on this higher perspective right here that I showed you on the weekly.
Uh-huh.
Look at what happens again. It happens straight up on the daily right here. So look, a bearish scenario, right? We're in a bearish scenario right now, or a bearish range, right? We broke out of this range. So we should be thinking bearish.
Yeah.
We have this blue line, which is also under this daily order block, and it doesn't touch it, right?
Yeah.
So I don't know, some people that don't that like know smart money, they know order blocks, but they don't understand why they don't always come back up to hit them. You can use breakers and mitigation blocks as another form of mitigation, because that's all really order blocks are, right? just another form of banks mitigating out of orders that they're in, right? So that last down candle before the swing up, okay? Or you could do this one, but I like this fat candle here.
Yeah.
From the body to the wick, let me make this gray. You can clearly see now. I know your eye, I know you got good eyes.
Yes.
There's that entry.
So pretty much whatever. So pretty much whichever candle takes out the liquidity, that would be the breaker candle, right?
Um it would be the last. So you know how you have like the last down candle before an up move?
Uh-huh.
It'd be like that in reverse. So when this breaks this minor, like this short term low, this
Uh-huh.
short term swing low, when it breaks that, it mitigates out of it instead of say like this right here where it broke all these lows, but it came back up to this order block, right?
Yeah.
But look at what's right next to this order block.
True.
Yeah. You see
So
what
it
I'm
could have
saying?
really been another candle.
Yeah. So there's like, there's this last down candle before this up move, but there's this last up move before this really long down move, right?
Yeah.
So it's like vice versa. So down candle, up move, and it's short. It's very, like short term low that gets violated, right? So it acts as like a break and a retest type of thing. Okay?
Yeah.
And it just does it again. It does it again right here.
Yeah. That's crazy. That's all the missing all them entries.
So look right here, does it again. See this wick?
Uh-huh.
Yeah. So it comes back up. You don't even need to go on the wick on this one. You could have done the body. But you see the body right
Yeah.
here? I guess I can do a line. I can do another line. So it barely tips it, right?
Yeah.
So if you were an aggressive trader, you would have got an entry with zero drawdown in that trade, right?
Yeah.
So that is this area for this reversal. Let's go on to the next one. So we got this area down here, this whole reversal area down here, right? So this one's going to be tricky. This one's going to be tricky. And I don't really have, the first thing I see though is equal highs right here. And to really get down to this, I'm gonna have to go to the weekly time frame because
Yeah.
well, I guess you could use this as a breaker scenario right here. So look at this right here. These equal highs or lows, excuse me. These equal lows right here.
Uh-huh.
They get violated, right?
Yeah.
They so say that there's stop losses and sell stops right under these, right?
Yeah.
And they get taken out right here. So as price trades up, what do we see in a bullish breaker scenario? Is that bullish range, which would be this, that bullish range, or the up candle in the most recent swing high prior to an old low being violated, right? So here's this old low, okay? And here's that up candle in the previous, in the most recent swing high, right?
Yeah.
There's this candle. So watch this. if I take a line right here and I draw this across, you can see clearly that, you know, you would have gotten wick entries on the monthly time frame, right?
Yeah.
But they would have been in a little bit of drawdown. I haven't um, I haven't really gone over like 50% of these candles. I'm not going to, but you can clearly see though that there was a breaker. Stops got ran through. We had a shift in momentum. We had a shift in the market right here. This whole thing. Shift in structure, right?
Uh-huh.
And we mitigated just directly out of this previous recent swing high, right? So let's go down to the weekly and see what we can see. Okay. See, this one is real choppy. This is choppy and ugly, right?
Yeah.
So what I do see in this price action is we had equal highs right here. Okay.
Uh-huh.
Also equal lows. But once again, we're on the weekly time frame. So we're in a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15-week range, right? We're in a 15-week range in here.
Yeah.
So it took a while for price to really do what the banks were trying to do, right? So
Yeah.
in this 15-week range, we see accumulation. We see an accumulation phase. And you'd have to go down to lower time frames to really get the details, but you can see right here, you know, we had the like a seller's climax, an automatic rally, and then your secondary touch in this phase B. But what really stands out to me is uh,
The
when
GU.
when it broke out of the range, when it broke these equal highs. What happened? What did price give us? Right. So we
Yeah.
had this last we had this last down candle before that up move, right? So what do we see? This is weekly time frame, guys. This is weekly time frame. You're getting entries on like this on the weekly time frame, right? What's everybody say that doesn't know how to get wick entries? What does everyone say? Oh, you know, you got, if you take trades on the weekly time frame, you're gonna have to have such a wide stop loss. You're gonna have to have this and that, and really they don't even know what they're talking about because we're over here getting trades with zero drawdown on weekly time frame, right? A
Yeah.
lot of people don't really know how to do this. Maybe for them, they might have to have a 50 pip stop loss, but we don't, right? So first thing I see after this range, and it could have gone either way. It could have gone either way. We have equal lows and equal highs. We could have gone either way. We could have broke through the lows and continued to the downside. But what happened? We broke through the highs, right? We broke through the highs, letting us know we might have this shift in structure. Okay?
Mm.
We might have this shift in structure. Now, this would have been a clean entry right here, right?
Yeah.
And now when we look at that weekly, remember this was that weekly line right here.
Uh-huh.
So when we look at that, what's really going on, with this, we kind of have a similar scenario with it right here. So this swing high, you see this swing high right here?
Uh-huh.
It's the same thing, bro, over and over and over again. Look. Basically, a mitigation scenario right here. So we get this swing low that did not go through the stops, right? But we broke the most recent swing high, right? But
Yeah.
no stop losses or whatever were violated. So this is a mitigation block scenario, right? So the most recent swing high we broke through. Where does it come back to? Right to it, right?
Yeah.
Right to the T. Okay. Now I know you've heard me say that I don't really take a lot of mitigation blocks or breaker block entries, just because they're a lot harder to catch uh, in the midst of price action being like this. You know, if this is all you see and you see price going like this, you know, you'd have to really be catching this and paying attention to what's going on. See how there was this down, two down scenarios right here?
Yeah.
So you could call this equal highs. You could call this equal highs, right?
Yeah.
And then look what happens, where it goes. Remember that last up candle before this down move that got broke through? You see how it just barely tipped that?
Yeah.
That's crazy, huh?
Yeah.
And look at this, we flew 1200 pips basically, right? So let's go down to the daily in this area. Let's go down to the daily. Let's see what we can see. Yeah, it's just it's the same thing. Like if we recap what we just went over, equal highs, this gets broken. You could have see, look, this last down candle. Actually, I want to look at this. You see this candle right here?
Uh-huh.
You see how there's an aggressive engulfing candle right here?
Uh-huh.
That could have been a sign right there that we could have had momentum to the upside. Now, I'm not saying that you could have, caught this buy right here, because that would be, well, I guess it would have been 1, 2, 3 days. 3 days right here. Maybe you could have caught this buy, but most likely, probably not. But this right here is giving us an idea of what the banks are trying to do, right? They move price aggressively up, right? And remember, we're still in this range right here. So after we see this is what I look for. This is what I want to see. Price break out of that range, right? Letting us know that there's a real direction, um, a real directional bias that can, happen, right? So we have this low,
Yeah.
and we come up, we make a higher high, a higher low, a higher high, and a higher low, right? That's basic market structure. Basic, basic market structure. We come back down into this 50% weekly candle, which is also the 50% daily candle. Let's say we bought right here, TP at these highs. It's a good 440 pips, right?
Yeah.
Now look at this. Look at this. This last down candle. You see this up move? You see it? You know, you've heard us talk about, you know, fat candles before. I don't know if you have or not.
I mean, what do you mean by fat candles?
Like okay, so like you know that retail traders they can't make candles do this, right?
No, that I didn't know.
Yeah, we don't us like even if we accumulated all of our money together, we wouldn't be able to move the price in such a fast pace, like at an aggressive pace. We wouldn't be able to do that. It takes billions of dollars, right, to move the market, you know, so many pips in such a small amount of time. It really does.
Yeah,
So you see this down candle, this aggressive down candle, and then this up move, that last down candle before this up move. This block or this remember there's equal highs here. There was equal highs here on the weekly perspective, and then that mitigation scenario that we saw right here, right?
yeah,
Which is also crazy because it goes right into like almost 50% of this institutional sponsored candle, right? You can tell when an institution gets behind their move because the candles are going to be somewhat bigger. Like look at this, look at these candles right here.
yeah.
That you know what that's from?
What?
Look, double top, right?
Oh yeah, yeah.
So how many retail traders do you think are selling right here? A lot. Hundreds and thousands, maybe millions, right? Just
Yeah,
selling right here. And look what happens. Price aggressively moves up, takes them out, goes in the direction that they actually wanted it to go in the first place, making them hate themselves. And then it breaks through all the liquidity that's sitting right here,
yeah.
right? Yeah, so that's what it looks like when retail gets in the market, right? So we broke down this area of reversal on the monthly time frame. Could have caught a lot of pips and a very nice position trade setups. That's why higher time frame biases always they always win over lower time frame because uh you know you could take you if you're going off of a 1 hour and a 4 hour bias without looking at the daily, monthly, weekly, or daily, that's like you're not reading the whole book, right? You're just opening the book up to like chapter 5 and then forgetting about, chapters 1 through 4
Yeah,
basically, right? You don't have a solid bias on the direction of the market. I know this from experience. I used to do it. I used to trade on the 15-minute time frame and wonder why I always would lose, right?
yeah,
So yeah, so always higher time frames always win. But that was that reversal area right there. Let's move on to this next one, right? So once again, every single time, every single time, equal highs or equal lows. I swear I see it way too much. Every single time. So once again, equal highs right here, and we have a distribution. We have a like a distribution schematic, right? With this upthrust. There's upthrust. Now there's no upthrust after this distribution. There's no UTAD. There's no liquidity capture after it, this liquidity got captured here, right? So just this UTAD right here. So I'm gonna delete this. Now first thing I see is right here. We have that monthly engulfing of this last up candle before this down move. Now I'm gonna probably start to sound like a broken record, but this is a breaker block scenario. Why is that? Why is that? We have a short-term low, the stops get ran through, and then a break of that short-term low. And where does that short-term low go? Right here, right?
Yeah.
So on a monthly perspective, on a monthly time frame, you can get these wick entries with minimal drawdown, right? You just got to know patience pays as well, right? Patience pays. So you got to know when these setups occur and patiently watch. Too many people, they'll get in trades just because they see a candle falling fast or going up fast at an aggressive rate, and then the candle will do something like this. It'll go like it'll shoot up, and then let's say they buy, and the candle will go like this. Yeah, I know you've seen that before, right? So then they get out, and what's the candle do? I know you've seen it before. I've seen it many times. So this is super juicy. I like this. Now let's keep going down the line. Look, this order block up here didn't get hit, right? Say you missed this breaker scenario. So now look what we get. First off, last up candle, down move. This candle gets engulfed, right? This candle gets engulfed on a monthly scenario.
Yeah.
Where does that go? Look, right back to it, right to the open of this candle. I gotta move this. Right to the open of this candle. We come back to it. So price gets engulfed. 2 months get engulfed. We have obviously maybe some imbalances or slippage on lower time frame perspectives, and we come back up and mitigate out of these buying orders. So let's say in this candle right here, let's say in this candle, this up candle, right? I gotta put it right there. So let's say in this up candle right here, there was buying, right? Institutions, banks, hedge funds, smart, big money players. Let's say that they were buying in this candle right here, and then they drove price down. They're in a lot of drawdown from this buy, right?
Yeah.
So they had to come back up, bring price to this area to break even, right? To break even on this buy,
Yeah.
which is when we attack, right? Because we know now, they aren't slick anymore, right? They
Yeah.
aren't slick anymore. They leave their footprints behind a lot. They leave their footprints behind a lot. So what, and it happens over and over and over again. It happens a lot over and over again. So look, as we move down in this bearish trend, look what we get. Another engulfed monthly candle. 1, 2 months, or one, I guess you could say, gets engulfed. What happens?
So pretty much the breakers and mitigation plays happen when it channels up for like multiple weeks. That's when they really happen.
Yeah,
It looked like to me that's went up for a minute. That's when they dropped
yeah,
off and had them.
yeah. Breakers and mitigations usually happen a lot after a breakout of an accumulation phase or a distribution. It usually happens a lot after that. Even even minor stuff like this, right? Because this is monthly, so this is 1, 2, 3, 4, 5, 6, 7, 8, 9 months, almost a whole year. You know what I'm saying? For this entry, right?
Sicking.
Almost a whole year for this to break out of this kind of sideways channel. I guess you could say. But even with that, these equal highs, it took 1, 2, 3, 4 full months, right, to hit that. And look at what price did after it captured all this liquidity. Look at the difference in the candles. See all these small body type of candles and then just a drop,
Yeah.
right? This candle alone is 462 pips.
Sheesh.
Yeah, compared to like, you know, this candle, which is 100 pips. We're on the monthly time frame. So over and over again, engulfed, doesn't come back up. Okay, cool. I'll look for a breaker or a mitigation scenario. You know what I'm saying?
Yeah.
So, and then this one, look, engulfed, comes back up. Bet, I'm going to enter. Engulfed, comes back up. Cool, I'm going to enter. Right? So now let's go down to the weekly, see if we can get into more detail in this area. Oh, okay. So recap from the monthly, we have equal highs. This is so funny right here. Look, you see these equal highs right here? And look at this candle. You see how they have just that one last like huh, of a you know what I'm saying? Like that one last push,
Yeah.
pushing through all this liquidity. That's straight up, manipulation. Straight up, right? So weekly time frame, we come down, look right here. See this last up candle where this um short-term low got broke, where we
Yeah.
were talking about the breaker scenario.
Yeah.
Look right here.
Nah, not perfect.
So look right here. In this bearish breaker scenario, we have this weekly engulfed candle, right?
Yeah.
All day. That last up candle before this aggressive down move. What's it do? Comes right back to it. Cleanly. Okay? Same thing. Up candle, aggressively engulfed, right? To the downside. It doesn't come back up, right? It doesn't come back up for some reason. Look, happens again right here. Last up candle, engulfed, gets engulfed, right? So what are we looking
Yeah.
for? Where's our point of interest? Right here. This stuff happens over and over and over again. the market is repetitive in itself. That doesn't mean that it's going to do the same thing over and over again the exact same way. It's going to do the same stuff over and over again, but in different ways. If the market just straight up went like this, you know, and just kept doing this, bro, we'd all be millionaires. We'd all win in this game. We'd all be millionaires, right?
Yeah.
Like, we would all know what's coming next, what's going to happen, when it's going to happen, how it's going to happen, and it's not like that. That's why different, you know, ranges get made, different breakouts get made, different types of sets of double tops get printed on the charts, different market structure patterns. All it's all repetitive, but also different in a sense, if that makes sense.
Yeah.
So this reversal point right here, I don't feel like I need to break this down anymore. We can go to the daily just to look at it, but I think that weekly is very detailed as it is. Yeah, okay, so cool. So here's a little Wyckoff right here. Here's a little Wyckoff scenario right here. Look. So in this area, you have these equal highs, right? You can actually call this now, when you go to lower time frame perspective, you can actually call this now your up thrust.
Uh-huh.
And then now this right here, your up thrust after distribution, right? So when we got these equal highs created, there was this sell-off, right? There was this sell-off. So that would be, you know, distributing, right? So when you're accumulating, right, you're gathering up orders. You're gathering orders, as many orders as you can. But when you're distributing, right, it's like selling stuff off, right?
Yeah.
It's like what is it? When your supply is greater than the demand, right?
Yeah.
So you're selling it at a higher price to buy it at a lower price, if that makes sense. So you have this up thrust right here. And I'm not gonna go in like full detail, but you have this up thrust in phase B,
Yeah.
and then you get to phase C, you have this UTAP, this up thrust after distribution, and then a beautiful markdown, right? All
Yeah.
right in here. Okay, so I'd say that's pretty detailed on this one. Um, I'm going to end this part of the lesson right here of part 2. And on part 3, we'll come back and we'll talk about this area, and this area. So hope you got some value out of this one. And let's keep winning. Let's keep learning. And enjoy the rest of your day.